because it is the day when Mahatma Gandhi had returned to India from South Africa. So let me thank you, all of you. I thank all the existing clients who are with us. I thank all the fellow colleagues from Max Life who have joined us from the India. And I welcome all the guests from overseas India. So let me share today's agenda. So today's agenda is to give you an update about Max Life as a company, the person who has invited you, about all of us, and
Ashna, you are on mute.
बहुत लेट बताया. Thank you. Okay, so I apologize. Now it's loud and clear, Arpit. Okay, thank you. So good morning, good evening, namaste everybody. My name is Archana Bhatia and I welcome you all on behalf of Max Life. And today is Pravasi Bharatiya Divas 2021. So I thank you all for joining in and I welcome you all once again. So today's, what is Pravasi Bharatiya Divas? So let me share that also with a lot of people who don't know that. So it is celebrated on 9th of January in India to mark the contribution of overseas Indian community towards the development of India. So it is celebrated on 9th of January. Why? Because Mahatma Gandhi had returned on 9th January in the year 1950 from South Africa. So I thank you all the existing clients who have joined and all the fellow Indian colleagues who have joined across the India. And I thank all the guests outside India who have joined for this special webinar and on this special day. So let me share today's agenda. So we will share a detailed brief about Max Life, how we are as a company, how strong we are as a company. So how, this is about all of us who have invited you. So we will share why to invest in India, as India has got strong roots, very strong roots, and that's why it attracts a lot of NRIs and OCIs to invest in India. So we will share that how investing in India is a great opportunity and what are the different asset classes for investments, where all a prudent investor invests, and what are the unique propositions and exclusive services which only Max Life is providing it to NRIs and OCIs. So that will be taken by Mr. Dinesh Mantri, who is heading NRI business for Max Life, and he has an experience of more than 17 years and has his expertise in NRI business and taxations. So at the end, we will take the question and answers. So please feel free to put your questions on the chat box. We will take it at the end. We also have Mr. Darshan Shirsakar, who's a qualified chartered accountant, and he will also share his views on taxations on FEMA laws. So with this, I would like to invite Mr. Dinesh Mantri, and he is also a qualified chartered accountant. So please feel free to put your questions on taxation, on repatriation. Yeah. So I welcome again all of you, and Dinesh, I welcome you also. So over to you.
Yeah, thank you, Archana. Just let me know if you are able to hear me loud and clear.
Yes, I can hear you.
Okay, sure. Thank you. And, and namaskar, everyone. Really appreciate you have taken out time on a weekend. I once again welcome you all to this special occasion on Pravasi Bharati Divas. This is the most important day for NRIs in India, and we celebrate it because the contribution of NRIs to the development of India is really very high, and therefore we should and that's the reason why we celebrate this day. Let me begin this webinar with presentation. Just let me know, Archana, if you are able to see this presentation.
Yeah, I can see this, Dinesh.
Okay, great. As Archana has mentioned, Pravasi Bharati Divas celebrated on 9th of January is also days, commemorates the return of Mahatma Gandhi from South Africa on the same day, 9th of January in year 1915. which started the freedom movement in India. Um, so really, thank you so much for being our clients and all our existing customers. Um, I wanted to the agenda for today. What Archana has also mentioned is we will share few things what about the company, why to invest in India, what is happening in India, what are the different classes of assets and investments, what are the unique propositions which India provides you as a non-resident, and what are the services which are exclusive for non-residents of India, and not just NRIs. When I say NRIs, I mean to say OCIs as well. I just help the annotation. Yeah. Also, we will take your question and answers at the end. If you have any questions, please feel free. Um, the the chat option will be open after some time, and you can feel free to ask your questions on the chat box. The questions could be on investments. The question could be on repatriations. Question could be on income tax, the federal tax of the US, or any other taxation of major parts of the world. It could be on foreign exchange management as well. So we have panel of experts of on these topics. Let me begin by talking about the organization which we represent. Max Life is a joint venture between two organizations, Max Financial Services and Mitsui Sumitomo. I'll take a minute for just sharing the company which we represent. Uh, Max Financial Services is a listed company on the stock exchange and national stock exchange, and Mitsui Sumitomo on the other hand is a leader in general insurance across the globe, and its headquarters in Tokyo, Japan. It's present in 39 markets, over 120 years of experience. Together, these two companies come and make a company called Max Life Insurance, and our vision is to be the most admired life insurance company by securing the financial futures of our customers. And when we say most admired, we mean to say that whenever a person wants to invest in India, the first company he or she should think about is Max Life. That's our vision. All our work, all our acts are towards accomplishing this vision. A little brief in just numbers. This is the 20th year of our operations. We are present almost 269 offices, cities in the country. However, in current situation, I'm sure you will whether you come to India or not, whether you live in India or not, digital presence very very important, and we are present digital in every respect. Our asset under management has grown to 68,000 crores. We are ranked 24th in any company in India to be the great places to work, and number one in a life insurance company. Why it is important for clients, for customers? Let me tell you. It is for employees, but if the employees are happy and if they are ready to work for long, the customer care will always be there. Uh, the the most important parameter for judging a life insurance company is how much is their death claim settlement ratio. So we settled 99.22% in year 2020. That's the best ever in among any life insurance company in India. And this is not the first year; it is for many years. Max Life is number one in this parameter. We are among the top 10 best fund managers in India, and we have an insurance value of 9.13 lakh crore rupees, approximately $100 billion. Uh, Let me tell you a last point about Max Life. It's not about how do we give an option to invest money. It's about how do we pay back to our clients. The most important point for any client, for any customer to invest money is how do we get back the money. So we pay money in two ways: one in case of living, and in case of unfortunate event of death. In case of living, every 8th minute we pay one maturity claim to one of our client. Every 30th minute, in case of an unfortunate event, we pay one death claim. And over so many years, our death claim settlement ratio has improved. Last year, 99.22%. On the left hand side, bottom of your screen, you will find one very important point which I want to mention here is Insta claim. Every insurance company says that we will pay the claim, but how fast we pay the claim, that's very important. we have come out with a very important thing for our existing clients and our new clients is Insta Claim, a, a death claim payment within one single day. The day when we receive the documents, same day the money is paid out. And in case of any delay, whatsoever reason for, irrespective whether it is in control of the company or not, in any circumstances, if there is a delay, we will pay a daily interest on the amount which we were supposed to pay. So that's the commitment which we give to our clients when they invest money with Max Life. Let me now begin about non-resident Indians. This is the most important slide, and I want to mention you about the money which you invest money in India. Do non-residents and overseas Indians, they invest money in India a good extent of money. Last year, not just last year, I wanted to mention last 30 years in a row, India has been receiving the highest amount of foreign remittances from individuals and non-residents. India is in 2018, as per World Bank report, India has received 79.5 billion US dollars as foreign remittances. Year 2019 data World Bank has not yet published as a report, but a research work has been done, and it says 83 billion dollars has been remitted by overseas Indians to India, which is a very significant amount of money. And that's the reason India celebrates a lot of work, which contribution which non-residents has done for India. And there are around 3 crore individuals and Indians living abroad, and they really invest a lot of money, not only for their family but for themselves and for upliftment of the country's economics as well. Let me now begin about why non-residents are investing money in India. This is a very important slide for me to share with all of you. India has been the fastest growing economy before pandemic. During this time of pandemic, all the economies have suffered a lot of challenges, including India as well. However, the future outlook is very positive. The IMF has and OECD also has predicted that year 2021 and onwards, India will be the fastest growing economy once again. So clearly, a lot of companies have now invested money in India. In last 1 year time, many top value organizations and corporations across the globe has invested money in India. Even during the time when people were not knowing whether they will live, whether they will not, whether economy will really do well or not. In any all these circumstances also, these top value organizations and corporations has invested a huge amount of money to India. In front of you, there are many names, and you can also read out many articles on these investments. So clearly, there is a big positive outlook towards India and its economy. When it comes to individual, when it comes to an individual, these are the 4 asset classes where people invest. You and me, like an individual, we invest in these 4 asset classes usually. Fifth and sixth asset classes are there, but not much traded, not much invested in. So equity is a one asset class, gold silver is another asset class, real estate is another, and guaranteed products are another. These are the 4 usual investments which every individual does. There are fifth and sixth as well. People do investment in arts and paintings. People do invest in diamonds, but they are very different kind of assets. Equity is a very important investment when people do, because it gives you very high return, but it comes with high risk as well. They could be fall, they could be very good rise, what happened in last 6 months time. It also gives you a very good liquidity, unless it is a penny stock. Gold and silver, on the other hand, is also very important investment, because they are very good hedge against inflation and falling equity prices. We have seen last 1 year, gold and silver has done really very well when equity market was not doing well. They are also it's also very highly liquid. Overnight you can sell and you can get money, but also there is price fluctuations. Real estate, on the other hand, is also one another asset where a lot of individual invest. The real estate gives 2 kind of income: rental income and appreciation of value. But however, it comes with a lot of maintenance and ownership cost, maybe property taxes. A lot of people has to pay on that. It is not very liquid, however it gives you a long term income. On the other hand, there are other products like guaranteed. Usually, in many developed nations, people don't invest in guaranteed products because the rate of return are very low. However, in India, a lot of individuals invest in guaranteed products because it gives you a safe, secure, and guaranteed returns, peace of mind. Yes, all three, equity, gold, real estate, the prices can go up and down. However, for taking care of this, a lot of people also, allocate some amount of money in guaranteed products. So proper or appropriate asset allocation is a very important kind of you can say investment which you have to do across all four asset classes. So it could be, many people say equity is the best investment. Absolutely, no problems at all and no doubt about it. However, can we invest all our 100% money in equity? I mean, a prudent investor should always have a appropriate asset allocation depending on your age, depending on your risk. Same is the case with real estate. So, so that's asset classes I wanted to mention. Why people invest in equity in India? Let me share with you. And this is a little, you can say, little busy slide or busy presentation. But let me explain this. Indian equity market has given a very high rate of return in comparison to any other big equity market across the globe. So we have compared the Bombay Stock Exchange with many big markets across the globe. UK, which is FTSE 100, New York Stock Exchange, Dow Jones, S&P 100 of US, Nikkei of Japan, Hang Seng of Hong Kong, Straits Times of Singapore. Because of paucity of the space, we were not able to show all the other equity market, but the comparison is really available on the internet. Over 15 years, 20 years, not just 5 years, 7 years or 10 years, because equity market has ups and downs. So all things to be put together, Indian equity market has approximately given 13% return in comparison to 3 to 6% across all the other markets. If you look at 20 years, Indian equity market has given approximately 11% return over 0.5 to 4.5% across the globe, all the big markets. Clearly, the reason why lot of individuals and FIIs they invest money in India, because the rate of return which you get in India is very high. Yes, you may say my mutual fund gives me very high. Absolutely, this is just a comparison of the indexes or the indices. Mutual fund versus different funds comparison can be made, but this is just a comparison of the equity market. You can say a broad equity market across the globe. Now, if you look at various products available for non-residents and OCIs, one of the product which Max Life and all lot of individuals abroad they invest is Platinum Wealth Plan. It has the flavor of equity. Investment is done in equity, and the two important points I want to mention to all of you is it has given a very good rate of return. Number one. Number two, various options of investments are available in this. Usually people invest in equity and they say it's done, but if you have other options like debt, like combination of debt and equity, this product allows you to switch between all these asset classes at a click of a button and without incurring any kind of charges, any kind of expenses or any kind of taxes. So without paying any tax, without paying any charge, without paying any expenses, you can switch between equity and debt or in any proportion as per your choice. That's a very important thing. It also gives liquidity, and in India it is completely tax exempted. So a lot of people from abroad they invest in equity market because this has a very good rate of return, and it allows you a lot of benefits without incurring any taxation in India. So this is one important thing which I want to mention. Gold and silver, as I was mentioning, there is no difference in rate of return across the globe, just the currency fluctuation difference. Let me talk about the guaranteed product, and very importantly, why people in India invest in guaranteed products and why a lot of individuals abroad are investing in guaranteed products in India. India, even after the reduction of interest rates across the globe during this pandemic, is giving you a very, very high rate of return. India still gives you 5.5%. If you look at your own country, you must be knowing much better than me. But the options of investment in guaranteed products, and I say guaranteed means you invest and you get a guaranteed rate of return. A very, very less amount of return is there in most of the parts of the world. And it looks like in future the rate of interest is not going to change much. So therefore, a lot of individuals from abroad, they invest in guaranteed products. And especially, let me share some of the propositions where a lot of individuals from abroad, they invest some of the unique things. I'm sure you know about bank deposits and many other products, but we can share with you a lot of unique propositions which a lot of non-resident Indians and OCIs, they invest in, and they look at because it gives you a unique propositions. One of the proposition I would like to share with a story, and this is just a minute story to share with you. And the story is a third child story. What is this third child story? Talks about Mr. and Mrs. Ram, a family who has two children and is complete family, and they work very hard and spend most of their earnings for their children education. When you say education, I understand a lot of countries you don't have to spend on their school education. However, you spend a lot of money on their extracurricular activities and upbringing. So swimming classes, guitar classes, and many other classes. We spend a lot of money on that. So this family also does the same kind of thing, and they meet an advisor. This advisor asks some questions to this couple. The advisor asks that, don't you think, Mr. Ram, it is time for you to also start saving for your retirement? Now, the couple says, and I'm sure you will have the same answer, I want to save. However, the cost of education and upbringing children is very high, and we are left with little amount to save for ourselves for our retired life. The advisor asks the next question. So, Mr. Ram, if you are not planning for your retirement now, would you be okay to ask your children for your household expenses once you retire? I'm sure your answer will be same what they have answered, that how can I ask? I'm 100% sure that I won't be comfortable asking for it. Mr. Ram, if you had one more child, and this is a hypothetical question, if you had one more child, would you give that child the same level of education which you are giving to your other two children? I'm sure your answer would be certainly yes. 100% I will do this. So, Mr. Ram, how much you spend money as an annual fees or extracurricular activities for your two children? And this is just a representation. Mr. Ram says I spend around 500,000 rupees, 5 lakh rupees per year on my school fees for both my children. So, Mr. Ram, now, and this is the most important thing, Mr. Ram, now I am asking you to adopt one child. I am asking you to adopt one child, and you fund this third child with the same amount of fees which you pay for your other two children. Mr. Ram, this third child has only one responsibility. I don't know about other two children whether they will take that responsibility or not, but this third child has only one responsibility, and that to take care of you and Mrs. Ram in your presence and in your absence as well. And Mr. Ram, this third child is your retirement plan. You don't know whether your children will take care of you or not. I am sure they will, but in case they do not, this third child, which is your retirement plan, will always take care of you. So treat your retirement plan as your third child and fund the same way like you fund education for your other two children or other child. This is a solution which we give to a lot of our non-resident clients and customers, and this name is this kind of option, or you can say investment opportunity, is called as monthly income advantage plan. I'm sure you have a lot of retirement plans in your countries, 401k in the US, superannuation fund in Australia, and you have pension pots in UK and many other countries for that matter. This is a very unique solution, and I would like to share some of the unique things which happens in this product or in this investment option, or a retirement plan. So this example is just a representation of a person who is age 35, and he wants to ensure that there is a monthly income comes to him at the time of retirement, and he invests around 200,000 rupees per annum for 15 years. And today Max Life tells that today when you invest 200,000 rupees, we are going to give a guaranteed amount of 300,000 381,000 rupees per annum for next 10 years once you turn age 50 after 15 years. So when you invest today 200,000 for 15 years, after 15 years we will tell exactly how much money we are going to get. We will not tell at the end of 15th year, we will tell today only that you are going to get a guaranteed amount of 381,000 rupees per annum every year for next 10 years, irrespective of the change in the interest rate in the market. And at the end of 25th year, when the money comes and entire lump sum value, which is almost the amount of money which you paid, 115% of that we will add, and then we will give it to you as a lump sum value. Now you will say, what's so different about it? Let me share with you. This is a life insurance plan. It has got a life insurance as well. When a person retires, he does not retire himself. He also retires along with his spouse. Both retire together. And therefore, a retirement plan should be such which should take care of you and your spouse both in any circumstances, whether in presence or whether in absence. So this solution has a life insurance policy or a life insurance component. I'm sure you will say, I have life insurance, enough life insurance in my country. Life insurance is never enough. We understand life insurance is good and enough, but our family will never say that it is enough. So what happens in this is, when a person invests, if everything goes right, the same kind of solution will continue. But in case of a unfortunate event of death, so for example, at the end of third year, if an unfortunate event of death happens, then we pay a lump sum value to the family to take care of current needs. And after that, rest amount of all the investment which was supposed to be done will be done by company, which means the investment which was supposed to be done by the husband will be done by the company, so that this income is come or will come to the family irrespective of whatever circumstances. And at the end, this lump sum benefit will also come to the family irrespective of the current situation. So this is a complete solution given to our clients, not only living in case of an unfortunate event of death, also this covers up. There are various options of 15 years, 20 years, 15 years, 12 years, 8 years payments. As per your requirement, your need, you can choose. Let me share another solution, and very unique solution for a lot of individuals living abroad, and this is a very important thing I want to share. This is a small 30-second story. This is about a person who retired at the age of 50 20 years back in year 2000, and he invested 1 crore in a fixed deposit. A lot of people across the globe, they invest in an annuity plan or in a product which gives guaranteed rate of return at the time of retirement. Same is the case in this situation. Now what has happened in year 2000, I'm sure you will agree, if you recall, in India, the rate of return of a deposits or a bank deposit was around 12%. In the US, in year 2000, around 20 years back, the rate of return of a guaranteed or bank deposit was around 5%. Uh, Now, what happens in this product? This is a wonderful product because you get guarantee, you get safe returns. But however, the challenge is, after some number of years, this has to be renewed, and once it has to be renewed, the rate of interest will change. Now, the maximum tenure of a deposit could be 1 year, 2 year, 5 years, sometimes 10 years, not more than that. So we have taken an example in the end of 10th year, which is 2010. This person would have reinvested in a deposit. At that time, the rate of interest was 10%. Now, if the person would have renewed in year 2020, the rate of interest has reduced to approximately 5.5 to 6% depending on different banks. The rate of return has come down. I don't know what is going to happen in future in year 2030. However, the trend line looks like the interest rate is coming down. It could be 2%, it could be 2.5%, it could be 3%, but looks like the trend line is really low. However, on the other hand, the inflation is rising every year. Across the globe, the inflation is on rise, and I'm sure in your country also the inflation has risen. In the US, in India, and everywhere in the world, the inflation has risen. So the cost of living is increasing. However, the returns of guaranteed product is decreasing. So how can we live with this kind of lower rate of interest every year? We have spoken to many of our clients, many of our known people who has retired. I have not retired yet, but we have spoken to many people, and they say that, Dinesh, we require to maintain our lifestyle after retirement, and we have to fulfill our dreams which we were not able to do when we were working, like vacation. We have to also protect our health. We understand many countries give a free health, like Canada. However, in many other countries, health is to be taken care by insurance, and their co-pay is applicable. So we have to protect our health as well from our own money, and we may have to leave a legacy to our next generation. All for all these things, you require a guaranteed income, not only for few years, not for 5 years, 7 years, 10 years. You require for lifetime. For them, this is a unique solution which you will not find in many parts of the globe. This product is called as guaranteed lifetime income plan. Guaranteed, as the name suggests, it gives you guaranteed income, lifetime income. When I say lifetime, I mean to say lifetime of a person, and I'll explain with an example. This is an example of a person. His name is Mr. Sangwan. He's age 50, and he has also got a good amount of income. uh, Over the years he has saved some lot of money, and he wants to secure his retirement when he turns age 60. Now, for that, he invests in lump sum value. He invests, let's say, just for a representation purpose, he has invested 1 crore rupees of investment, and he wants an income when he turns age 60, when actually he retires. And this is just a representation. There are many options available, and the example is in front of you. So when he invests 1 crore rupees today, when he turns age 60, we are going to give guaranteed, and today only we will tell him that what's the amount of income we are going to give. We are going to give him 11 lakh 27,100 rupees every year, every year till he lives, irrespective of the change in the interest rate in the market. Whether interest rate comes down or goes up, that doesn't matter, and that will not impact the returns, and the same rate of return will be applicable till the Mr. Sangwan lives. And when I say lives, really I mean to say lives, till he lives till age 80, 90, 100, maybe 120 years. That doesn't matter. Till he lives, he is going to get the same amount of income every year, year on year. The day when he is no more, in case Mrs. Sangwan is also living, she will also require a monthly income or an annual income to survive, for taking care of herself, for her dignity. And I'm sure you will agree with me. And when you look around your society, you will find among old age people, you will find many females rather than males, because females genetically they live longer. So, therefore, we require to safeguard their income as well. So, if Mrs. Sangwan lives, we will give the same level of income irrespective of the change in the interest rate in the market. Same level like 27,100 rupees on an investment of 1 crore. You can understand, you can easily calculate what's the rate of return, and we will give till she lives. The day when she is no more, the entire investment which Mr. Sangwan has invested, we will add 5% to that, and we will pay to the next generation, to the child of this couple, as a legacy value. So, this product clearly helps a lot of people who are at age 40, 45, 50, maybe old age 70 years of age person. They invest a good amount of money in this kind of investment option, in this kind of annuity option. There are many people who lives abroad and they have parents back in India. They also invest in their parents' name. So I know a person who lives in the US, and they have their parents back in India. They want to invest money because they want to ensure that the income comes to their parents irrespective of whatever situation it is. So they invest money in dollars, and the income is given to the parents till they live. And for any at any time when both parents are no more, the entire investment which they gave will be given back to them in the country in which they live. So that's a wonderful solution, and a lot of people look at this kind of solution. I want to also mention a third product. Sorry if I am taking some time, but I think I should share some of the unique propositions which a lot of individuals look at when they invest money in India. Some of the other investment options where a lot of individuals look at is guaranteed options. Now, I'm sure you know about guaranteed options in your country. Say, certificate of deposits, bank deposits are available in India, bonds are available. The only thing and good thing about those bonds and certificate of deposits is they are give guarantee returns. They can be liquidated any time. The interest rate is guaranteed. However, the challenge is the interest rate is guaranteed on your today's investment only. So there are a lot of people who don't have all the money saved till now. They want to save money over time period. Over 10 years, 15 years, 20 years time. They want to save money for their many other goals of life. Now, for that, they require to invest money every year. Every bank or every investment option, when they give guarantee return, they say that this is the rate of return which you get on your today's investment. So when I go to a bank or I go to a deposits or I go to a bond dealer and I say I want to invest 500,000 rupees, how much is the rate of return? They say, Dinesh, you get this amount of return. But if I say next year if I come and invest in 2021 or 2022, what is the rate of return you will give on that investment? The answer would be uh, the applicable rate at that time. The interest rate is on fall. We all have seen the interest rate is going down. So in next year 2022, 23, 24, 25, the year when I invest, I am not sure the rate of interest. So I want a product which gives me a guarantee rate of return whenever I invest. The same rate of income, same rate of interest should be applicable on that investment. Is there any option available? So for this reason, we have come out with a product called Smart Wealth Plan. And this product gives you that kind of return. Not the same rate of return will be applicable which is applicable on the first year investment. Same rate of return will be applicable on your next year's investment. So I just give an example here for Mr. Ravi, who is age 35 and he wants to build a child's higher education. She is 2 years old. After 16 years, she wants a higher education money. Now, Mr. Ravi started investment for next 8 years time and he wants money in the end of 16th year, and this is just a representation. There are multiple combinations and permutations are possible depending on the need of the client. This says that Mr. Ravi has invested first year around 1 million rupees, which is 10 lakh rupees, and for 8 years. So when he invested today, we will tell at the end of 16th year, Mr. Ravi is going to get 1 crore 60 lakh 67,600 rupees. Exactly the same amount of money will come. But he is going to invest over few years, second year, third year, fourth year, eighth year also. Same rate of interest will be applicable on the other investments as well. The number of years does not matter. Same rate of interest which is applicable in the first year, same rate of interest will be applicable on the eighth year investment as well. For our existing clients, I must tell that we do a lot of work for our existing clients. You will appreciate that existing clients, giving services to existing clients is very important, and the most important thing, not very important, the most important thing for our existing clients, there is a discount on the premium. So if you invest, let's say 1 million, 10 lakh rupees, you will get a discount of 2% in the first year investment. So you don't have to invest entire 10 lakhs, you will invest less amount. However, you will get the same rate of interest and same amount of money. So this is a wonderful product for our customers who want to invest money in a guaranteed product and do not have all the money today. They want to invest over years. So for them, there is no other product better than this, which gives a guaranteed rate of return not only on today's investment but on your future investment as well. Same product is available for our retirement solution as well. If a person wants to invest for their retirement, so this person, Mr. Agrim, who is age 40, he wants to have some income after some number of years. So he pays 500,000, 5 lakh rupees for 10 years. So he invested 5 lakh for 10 years, which is 50 lakhs. From the 12th year onwards, we are going to give him 4 lakh 73,000 guaranteed for next 25 long years. And this income is going to come without any interruption, without any change. Same rate of income will come. And at the end of 25th year, the entire investment which he has made, 50 lakhs, will be given to him as a lump sum. So, same product has got 2% discount for our existing customers as well. So I just repeat, the same amount of income, irrespective of the interest rates, irrespective of the change in the rate of interest in the world across the globe, he is going to get the same level of income. This is a product a lot of individuals like when they are abroad, for themselves or for their parents or for their for building up coppers for their retirement or their children's higher education. There are multiple other products, unique products which Max Life gives to our clients. I understand I have taken a lot of time. However, I want to mention to you that there are multiple different permutations, combinations could be done for each individual, and therefore, if you have a question of what to do and where to begin, I want to recommend that please take out your 40 minutes time and discuss with the advisor who has invited you over this webinar, and share your requirements, your needs, your reason for investment, and he or she will be able to ascertain those needs, and he or she will be able to also suggest you the right product and the right solution which could be apt for you. I understand that you have many questions. That's absolutely fine. But I will take one more minute, and I would like to share the next topic of the propositions, the customer service, not just the products. The products are absolutely good, and there are a lot of people who invest. A lot of companies talk about their products, but I wanted to specifically mention about the services which we give to specifically to non-resident individuals. When I say non-resident, I doesn't mean only NRIs. I also mean to say OCIs. Uh, Number one thing I would like to mention is the customer can buy whether they are in India or whether they are abroad. So today, if you are abroad, then also you can invest money, irrespective whether you will come to India or not, or whether you are there in India or not. You don't have to. Very easy, hassle-free documentation. You have to just send few documentation, know your customer documentation, KYC, and everything is through digital medium by an email or secure network. Very importantly, and I would like to mention this clearly to a lot of people, especially to OCIs and to non-residents who intend to live abroad, you can send money in any of your currency in which you are earning. So if you have Indian rupee in India, you can invest in that. You can also send money in any other currency in which you are earning. So if you are earning in Canadian dollars, you can send money in Canadian dollars. You can also send money in US dollar as per your choice, as per your whatever you way you want to invest money. So that option is available for you. Very importantly, uh, at the time of maturity, at the time of proceeds, how do we pay that money? All investments in India ask you to have an Indian bank account at the time of withdrawal or at the time of redemption. So you must have, whether you invest in real estate, whether you invest in mutual funds or life insurance or any other investment option, you must have an Indian account to get that redemption. However, this is not the case with Max Life. Let me tell you, Max Life understands the need of the client and need of you. May not be that you after 15 years, maybe 10 years, you hold an Indian bank account. Maybe today also you don't hold an Indian bank account and you don't intend to hold an Indian bank account. So you can send money from your foreign account, and Max Life at the end of maturity will pay you back in your account as per your choice. In maybe in your own currency or in Indian rupee as per your choice. You don't have to make other choice today. You can choose you can choose the currency when you want to have the redemption. So we have many client of us who has a Chase Bank account, Bank of America account, and they send in US dollar. They have Lloyd's Bank account in the UK and they send money in British pound, and we pay back them in their own bank account in their foreign currency, in their own currency. Uh, Whether they want to take in Indian rupee, that's their choice. But if they want to have money in foreign account, which is US dollar account or British pound account or whichever currency, Canadian dollar account, we can do that as well. You can change the currency as well. So maybe today you are in US, maybe after 5 years, 6 years, you shift yourselves to Australia. Could be, there could be chance. In that situation, you want money in Australian dollar, so we will pay you in Australian dollar as well. Lastly, you since you are a non-resident, and it could be useful not just when you want to buy a life insurance plan for Max Life, it could be useful for you whenever you buy something from India. So this is about a goods and service tax. When you buy anything from India, by the way, if you buy anything from your own country as well, you have to pay sometimes service tax, In different countries, it is called as VAT. Sometimes it is called as GST. Sometimes it is called as sales tax, or something like those kind of names. In India also, GST is applicable on life insurance plans. However, since you are a non-resident, and it is very could be useful for you if you buy anything from India next time. If you buy anything from India next time, you can ask the seller to waive off the GST applicable on that good, provided you send him your foreign address proof, and you pay money from your foreign account, or you pay money from your NRE account. This is allowed as per law, because you are a non-resident. Max Life understand this and waive off the entire GST if you pay from your foreign bank account without converting to Indian rupee, or you pay from your NRE account. You have to just give your foreign address proof, could be any address proof, utility bill or your mobile bill or whatever bill, could be paid, could be given by you, and the entire goods and service tax will be waived off for you. Max Life does it. The seller can other things which you will buy in India. The person can also do that, provided he wants to do that. So these are some unique propositions which Max Life gives to its clients who live abroad. And not only this, digital medium, we are available through any digital medium: WhatsApp, email, phone call, post. All options of contacting are available with Max Life. So these are some of the things. Lastly, I wanted to just tell before I move, before I give this back to Archana, that if you have a question where to begin, please take out your 40 minutes time and discuss with the advisor, and make him understand or her understand the need what you want, and he or she will be able to suggest you a right solution. So that's all from my side. Really appreciate you have taken out time. Archana, if there are any questions, I am ready, and Darshan is also available to answer. Thank you so much.
Yeah, thank you, Dinesh. It was wonderful. And there are not any, there are many questions. So the
Oh.
first is, can we get this session recording, please? So yes, you can take the recording from the person who has invited you, or you can write to us at NRI at maxlifeinsurance.com. I'll just put it in the chat box. So we'll start with the first question. And that is the amount which is paid as returns taxable in India? So Dinesh, if you could throw light on taxation.
Sure. Very important question. Let me share the answer, and I would stop sharing the presentation and I answer directly. So the question is whether the income which comes out of the insurance policy is taxable in India. Answer is absolutely right. There is no tax. Let me share with you. The taxation of India says that, according to Income Tax Act of India, section 10, subsection 10D, it says that any life insurance proceeds or any proceeds from a life insurance policy will always be tax exempted in India. You don't have to pay any wealth tax, neither you have to pay any income tax on these proceeds when you invest in India. So it's completely exempted. But if you are investing in the annuity product, if you recall the product which I mentioned which gives lifetime income, that is not a life insurance plan, that's an annuity plan. Annuity plan is a taxable income in India. Therefore, a tax has to be paid as per the applicable slab. So if a person has invested 1 crore and he gets, as I mentioned, 11 lakh rupees as per the applicable slab. So first 2,500 rupees is tax free, rest 2,500 will be charged at 5% and rest at 30%. So that applicable tax will be paid on the annuity income, but not on the life insurance plans. Yeah, over to you, Archana.
Yeah, thank you, Dinesh. Dinesh, if I'm an NRI and OCI and I want to invest in real estate in India, so what are the things I should keep in mind? What are the implications? If you could just throw a light on that also.
I am no person to answer this, but let me try. Lot of things are important when a person invests in real estate. Let me share few of the things, and I will also share some of the tax implications from a tax point of view, because that's my line of thought. Real estate gives you a very good income, as I mentioned, it gives you a rental income for a long time. It gives value appreciation over so many years. It is a wonderful investment. However, you have to also understand tax implication. Provided if you are a non-resident, if you are a non-resident of India, if you are an NRI or you are an OCI, and when you invest in real estate, investing is very important, very good. But when you get money, there are tax implications. The person who pays you rent, so if I am your tenant, I am paying you rent, I have to deduct 30% tax. I have to withhold 30% tax on the rental income which I pay to you, irrespective of the amount of money. Whether I pay you 1000 rupees in a month, I have to deduct 30% or I have to withhold 30% tax, and that tax is under section 195 of Indian Income Tax Act. Every person who pays to a non-resident rental income has to deduct that, and if the person does not do that, there are other penalties applicable to that person. It could be 10,000 rupees per transaction as a penalty. So therefore that is very important thing to understand. Second thing, when you sell off the property and you get income, capital gain, like in any other country, the person who gives you money, who buys this, will have to withhold 30% tax before he pays you on the income, the capital gain. So if let's say there is a investment real estate which you have done and it is bought for 1 crore rupees and it was sold for let's say 1.5 crore rupees, example. So the 50 lakh rupees increase or incremental value is taxable. So that person has to withhold 30% tax on that capital gain as well. So not only rental income, the capital appreciation is also withhold tax, and you have to file your income tax return in India if you want to get back money, the tax which the person has withholded. So these are the two tax implications you should always remember before you invest in real estate. But let me also tell you, investment in real estate is good, but you need to know about the tax implication, before you take any decision, and that will be an informed decision. Yeah.
Yeah, thank you, Dinesh. Are investments FDIC insured? It's foreign
Yeah, I
deposit
understand. That's
insurance.
US. So I
Yeah.
understand this. In India, it is something else, and in US, it's named something else, but it's the same thing. Um, FDIC is a banking regulation, which says that if, God forbid, a bank goes bankrupt or bank goes down, you will get this amount of money. Irrespective of how much money you have invested, this is the amount of money which will be secured for you. Life insurance, on the other hand, is much, much secured. FDIC is also an insurance, right? Given by a government, given by federal government. In India, it is also an insurance given by the Reserve Bank of India. Same is the case like in US. In India, life insurance are very, very much regulated, and all the investments which we have made, except for the equity product, are invested only and only in central government and state government securities, which are guaranteed by sovereign guarantee of Indian government. So that you will not get a better guarantee than this kind of thing, and not just small amount of money which is guaranteed like FDIC and banking regulations in India. This is completely guaranteed, not just up to a certain amount. So that's the answer I wanted to mention.
Yeah, thank you, Dinesh. What about taxes on interest? Would I have to pay taxes in India as well as in US on the interest income?
Surely. Yeah, very important question. Interest, I understand what you are saying. Interest means the income which you are generating out of life insurance policy. So if that's the question, then the answer is little longer, but I think I should mention. Um, and specifically about US. Different countries tax life insurance differently. So when you are investing in life insurance in India, because you live in your different country and you are investing in India, you are supposed to do or supposed to work upon two countries taxation. Number one, India, where you invest. Number two, the country where you are living, not at this time but at the time when you are reaping the incomes. So when you are getting that income, where are you living? That country's tax law will be applicable. Now, in I'm talking about US and India alone right now. India, as I mentioned, the income from insurance is completely exempted from income tax. Um, Sorry, there is a
Dinesh, we have to
sorry. I my apologies. So
sharing rights. We have to disqualify.
yep. Sorry for this.
Yeah.
Let me start this once again. India and US. Um, when you invest in India, the income from insurance is completely tax exempted. No income tax, no wealth tax. However, in the US, it is not so. When you are in US at the time of income, you are subject to US tax laws. One very important thing you should know and remember this is there is a double taxation avoidance agreement signed by IRS US and India's CBDT, both governing authority of income tax, federal tax in the US, income tax in India, and both this treaty is you can read it if you want to. It's available in the IRS website as well, and in Indian income tax website as well. Article 11 of this treaty clearly mentions uh, that if a US resident or a US citizen invest in Indian life insurance, the income which you generate out of it will be taxable not as per the slab rate in the US. A lot of people have this understanding that this will be taxed at a slab rate. No, it will be taxed at 10%, the base slab rate of the US federal tax. And I'm talking about federal tax. The state tax is separate. Different depending on which state you lives in, you have to pay tax accordingly. The federal tax is only and only 10%. That's the reason a lot of individuals from the US they invest in India, because they are completely exempted in India, and in the US you will pay just 10% tax on the gains. So you are getting higher rate of income, you are also paying a very less amount of tax. So it's a much advantageous position when you invest in Indian life insurance. When it comes to other countries, every country, as I mentioned, tax insurance separately, differently. Canada differently, UK very differently, France very differently, Middle East completely exempted because there is no income tax in Middle East. So we have a proper and authenticate, you can say, uh, research on the income tax and federal taxes of different countries. If you want to know more about it, because we have less time, if you want to know more about it, my only recommendation is that we can share with you your own country's tax law, and we will also share the URL of your income tax website where what is mentioned, and we will share with you individually. Once you block your 40 minutes time, it will be very appropriate for us to share with you exactly your own country's tax law. But I just shared for an example a US tax law, very beneficial for people who live in the US. So that's all from my side. Archana, any other question?
Yeah. Thank you, Dinesh. So we start to pay the premium as a NRI. Suppose I'm an NRI and I have started paying premium in foreign currency. And then we shift to India. So can we start paying in Indian rupees for the balance of the period?
Absolutely, no problems at all. As per your convenience, we have still many people who, when they were NRIs or OCIs, they were abroad. They paid in US dollar or Canadian dollar or whichever foreign currency they are earning in. After returning to India, they still holds a RFC account, resident foreign currency account, and they can still pay from that foreign currency account, or they want to pay in Indian rupees as per their convenience. There is no question which will be asked. You don't have to inform someone that I want to pay this year by this currency and this year by this currency. Nothing. You just have to pay. That's it.
Thank you, Dinesh. What if for some reason I'm not able to pay for few years? This is lapsed or I can continue later?
Very important question. And let me share with you some of the things which I never mentioned in this webinar. And thank you for asking this question. Life insurance is a long-term investment proposition. Therefore, we understand that there could be financial complications there could be financial situations could change with everyone or with anyone. Now in these circumstances, if you pay, let's say 1 year, 2 year, 3 year, and after that you are not able to pay, will your investment go lapse? Will your investment go down, or you have this concern and there's a genuine concern? Let me share with you few of our products which I just mentioned, like Smart Well Plan, Monthly Income Advantage Plan. There are options available. If you pay for 2 years, 3 years, there are certain number of years, especially in these products, they are 2 years. If you pay for 2 years and after that you are not able to pay, then the policy does not go waste. Yes, the insurance coverage will be proportionate. So which means, let's say you were supposed to pay for 8 years and you paid only for 4 years, example. Fifth year you are not able to pay, and after that you don't want to pay, so you paid 50%. Therefore your insurance cover will also go to 50%, and all the returns which were supposed to come to you will also become 50%. So as a client you will never lose money. It will come at the same proportionate value as per what you have paid. So for example, if in a smart wealth plan you were supposed to pay 12 years, you paid just 4 years, example. So you paid one third. All the income will become one third, and all the insurance value will also become one third, and therefore as a client you will never lose money. That's our commitment which we give to our client, and the benefits which we give to our clients. Over to you,
Yeah,
Archana.
thank you. Thank you, Dinesh. So it means that all the benefits will become proportionate. So, right?
Absolutely.
So I'm assuming when we get money in USD, we will get it at the exchange rate prevalent at that time. Please confirm.
You are right. Absolutely. So when you invest in India, except for the FCNR account, you have to convert your foreign currency to Indian currency, and when you get back, you will get in your foreign currency, but applicable exchange rate will be there. Now you may have a point. I am just digressing from there, and I am taking the leaf out of it. What you asked is, when the Indian rupee devalues, then I will lose money. If that is the question, then I have answer for that as well. Let me share with you. Most of our clients ask this question, and we always suggest them this answer which I have mentioned. This answer I have not made. In fact, I have asked this question to many of the investors living in US, UAE, and many other countries when they invest in India. And I have asked many people, large value investors, some corporates, and when I ask them, when you invest in India, you have to convert your dollar to Indian rupee, and Indian rupee depreciates. So then why do you invest money? You know that you will have to pay back in US dollars. The dividend has to be paid back in US dollars terms, and the Indian rupee depreciates. Then what's the benefit out of it? The answer which I got by value investors, and same answer I am going to share with all of you as well. And I was expecting this question, and therefore I have a slide for this, and I will share this. So a lot of people say in last 1 year time, maybe 5 years time, the US dollar or the Indian rupee has depreciated too much. Uh, so you need to find out two things. Number one, how much depreciation you will have, how much depreciation can impact you. Number one. Number two, if you don't invest in India, you will invest in your own country, maybe US, if you're talking about. What is the option and what are the rate of return you get in that investment? If you get more rate of return in the US, and after depreciation of currency you get lesser return in India, then it does not make any sense. But even after currency depreciation, if you get higher rate of return in India, it makes sense for us to invest little part of our investment in India. So I am going to give you an answer which I got from many value investors who invest from US to India, many corporations, many FIIs who invest money in India. They say don't look at 1 year, 5 months, 6 months, and maybe 7 years currency. The reason, in lesser time, currency can depreciate too much or currency can appreciate too much. It could be very different scenario. Example, in year 2006 Indian rupee appreciated, 2011 Indian rupee appreciated, in year 2020 Indian rupee depreciated from 70 to 76 in just 3 months time, the day when pandemic happened. But after that, 76 Indian rupee appreciated also too much in 3 months time to 73. So in small time, this depreciation and appreciation could be very different. You will not get a right picture of what is the depreciation rate. You will find sometime 5%, sometime 11%, sometime positive 5%. So you should look at a little longer tenure. Let me give an example. In year 2000, 20 years back, US dollar was 43, 43, you can say 42, 44, that kind of range. In year 2020, Indian rupee became 70, the dollar became 76. And I'm taking this example for 76. Today the rate is 73, that's a different issue, different thing altogether. Let's take a 76. When you do a calculation from 2000 till 2020 in 20 years time, it's a good time to see from 43 to 76 per year depreciation rate is approximately 2.8%. You put this values in CAGR calculator or in your search engines, and starting value is 43.6, ending value is 76. The percent in 20 years time, you will find answer 2.8. In life insurance, you don't invest in lump sum. This depreciation of 2.8 is lump sum. When you invest in 2000, you got money in 2020. When you invest in life insurance, you invest in a staggered way. So first year some money, second year some money. So first year for 7.5 lakh rupees of premium example, you will send $10,000. Next year you will not send 10,000, you will send less. Same is the case every year. So the depreciation also comes down to approximately 2.3%. Now, I'll give you an example. And at the bottom, if you invest in guaranteed product in the US, what's the rate of return you get in there? I'm talking about guaranteed products first. The rate of interest ranges from 0% to maximum 1% available in current 30-year municipal bond in the US. Not everyone will invest in municipal bond, 30-year municipal bond. Usually people invest, if they invest in guaranteed products, they get 0.1, 0.2, that kind of range. Minus the tax you have to pay there, you get in your hand almost negligible, 0 or 0.07, maybe 0.5 at the highest slab. In India, you get 6, minus depreciation of 2.3, minus the tax which I mentioned, 0.3, you will get 3.4% in guaranteed product. A big difference from almost 0 to 3.4%. And that's the reason some part of your portfolio should be, and recommendation is should be in Indian rupee, whether Indian rupee depreciates or not. Same is the case in equity as well. I understand last 1 year equity has gone down and up also, but over a period of 15 years, 20 years time, I showed 6.5% is the rate of return in US equity, 12% in Indian equity. If you compare everything, tax and all those, capital gain tax of the US and Indian insurance tax, still there is a good gap in the rate of return after depreciation as well. And that's the reason a lot of corporations, lot of companies, they invest in India. Everyone knows that Indian rupee depreciates, but whether you have a better option or you have a diversification option when you invest in India, and that's the reason why you should invest. Currency depreciation and appreciation could be for different currencies, could be different. So you just give an example of US dollar. Other currencies are different. So some currencies goes ups and downs, except for UAE dirham. US also dollar remains same. Other currencies goes up and down in different directions. If you want to know more about it, my recommendation is, if you take out 40 minutes time, we have a separate presentation for each country, and we can share that as well. So that's the answer I can share. Archana, over to you.
Yeah, thank you, Dinesh. So what happens if for some reason Max Life as a company goes bankrupt, like many banks in India have been due to frauds, etc.? What is the guarantee or security of my investment? So very important question, Dinesh.
I understand. Let me share with you life insurance. You would have heard banks. Banks, the reason why banks goes ups and downs, not all the banks, but low rated banks goes. The reason is banks business is to get investments, deposits, and give loans to people. That's the business of bank. Now, when you give loans to loans to people, and if you don't give loans to right people who has a capability of paying back, then it could become an NPA, and therefore the challenges are there. You would have never heard about a life insurance going bankrupt. Why? Because life insurance never give loans to people. When you invest money in life insurance, the entire money, except for the equity related product, and I repeat, equity related products are separate, they're invested in equity. Rest all products, the money is invested in Indian central government and state governments sovereign guarantee bonds. You will never get a much better rated much rated bonds than a sovereign guarantee by a government of India bonds. So even though whatever may happen, but these bonds you will not have a better safety than these bonds. Now, if government of India goes bankrupt, then we cannot do anything. But likelihood is almost zero. Nothing like that can happen. In any circumstances. So that much I can assure you. All the investments which we make are publicly disclosed. So we can visit our website, corporate website, and every quarter this data is updated. You will know where do we invest. Today also you will know on 31st of December, because that was a quarter end, where did Max Life invested, which are the bonds where we invested, and how much is the rate of return we got from those bonds. So our disclosure norms are very very high. You can look at for last 15 years also, those kind of investments which we had made.
Yeah. Thank you, Dinesh. So this shows how transparent we are as a company. So my next question is, Dinesh, if today I'm an Indian resident and I'm planning to move out to any country permanently, so what are the things I need to do? Important things which I should keep in mind.
I understand. Good. If you are a resident, and if you are still watching this, thank you so much for this. Let me tell you few things from a taxation from FEMA related items. Number one, very important thing, you must tell your bank. First thing you should do is you must tell your bank that you are no longer a resident, you are a non-resident, and kindly change the bank account from a resident to a NRO account. This is the most important thing you must do. If you don't do, I repeat, if you don't do, there are a lot of penalties which are applicable as per FEMA. It could be up to 200,000 rupees, 2 lakh rupees. Second thing, you must tell your all investments banks, your mutual funds, your life insurance company to change your residential status in that investment. Your if you have hold equity shares, you must change from a resident to non-resident. Uh, from a perspective of tax, from a perspective of you can say disclosure. So that's number one. Number two, you can hold your investments which you have in India, like your real estate, your other things. All those things are continue to be. You can hold it. You must not. What you should not do, you must not invest in agricultural property from now onwards. When you become non-resident, means permanently, not temporary. Non-resident is fine, means you are just going abroad working there and you still hold a NRI residential status, then it's not a problem. But if you are an OCI, a permanently resident outside, you must not invest in agriculture property or any farmland. That is not allowed as per law. You must not invest in lottery, chit funds, real estate for farmhouses. Those kind of investments must not be done. These are some things which you have to do, Archana, I think.
Yeah, thank you, Dinesh. And if we do it vice versa, if the question is reverse, if I'm a foreign resident, like, I'm an OCI or an Indian, and I want to come back to India permanently, what are the things I need to do?
Very, very important, I think. If you are a NRI or a OCI and you are returning to India, there are three things again to be done very, very importantly. Number one, you must tell your bank that you are no longer a non-resident. You are a resident in Indian. Therefore, your NRO account must be converted to a resident saving account. Your NRE account must be converted, and I repeat, must be converted to a resident saving account. You can continue your FCNR account for few years, but after some time you have to convert to a RFC, resident foreign currency, if you want to still hold foreign currency. You have to tell all your investment companies to change your residential status. And now onwards, remember this point: interest which you earn from NRE account will be taxable. If you don't change also, it will be a taxable income. It will no longer be a tax-free income. If you continue your NRE account, again, I repeat, it will be a penalty. A resident, a non-resident will become a resident if he is in India for 182 days or more. So if you come to India permanently before October, and I repeat, before October, 1st of October, then you are a resident and you must convert your NRE account. You are no longer a non-resident, and therefore you have to convert your NRE to resident account. And your interest in NRE account is no longer tax free, it will be taxable income. So therefore, a lot of Indians who live abroad, they invest in NRE deposit. That's absolutely good because it is tax free and all those. But when you come to India permanently, that interest will be taxable from the day when you become a resident. But life insurance is tax free, whether you are a resident, whether you are a non-resident. So therefore, a lot of non-resident, they try to invest in life insurance because for a longer tenure it is tax free. So that's the point I want to mention.
Yeah, thank you, Dinesh. A very important question. Sometimes a lot of people, they don't mention their NRI status, they keep it as an Indian status. So does it has any implications at the time of settlement? Maybe it could be a death settlement, a claim. So if you could just, and if it is under MWPA, what will be the implications?
Surely. I just missed one point, Archana, about a person who was resident and now became non-resident. He or she must tell the tenant, if you hold a residential property, that I am now a non-resident. Because if the tenant is giving rental, he has to deduct now 30% TDS, the withhold tax, before he pays the rental income. Otherwise, he will be in trouble. The tenant will be in trouble, and it can go very wrong. So once you return from once you go out of India, you have to tell everyone whomsoever you get income from, not just life insurance, your mutual fund, your investments, your tenant, your whomsoever you are getting money from. You have to tell you are non-resident, so that they will be safe. Otherwise, it will be trouble for them as well. Life insurance settlement of claim does not matter whether you are a resident, whether you are a non-resident, whether you are a OCI, whether you are an Indian resident. Life insurance death claims is very simple. The death can happen anywhere across the globe, or anywhere for that matter. A lot of people, some person asked me if I die in when I go to moon, if chances are there, then what happens? So one person was working in NASA. So, but just give an example: if a person dies and we get a death certificate, definitely the death claim can be settled very easily. Without any hassle. I mentioned in the first part of the webinar that one day death claim settlement can happen with Max Life.
So the misrepresentation, how does it affect?
Oh yeah, so when you invest money and you are an NRI, you must mention as a NRI. You are no Indian resident. You are a non-resident. However, it does not impact any premiums, anything, but it impacts a lot of regulations which India has signed, like CRS, Common Reporting Standard. We have to inform your country where you live that you have invested. Does not mean that you are in trouble, but there are some regulations which we have to follow. Therefore, you must mention NRI. Our underwriting will happen differently because some countries are safer, some countries are riskier. Example, if a person lives in Afghanistan, the risk is very high in comparison to India. Therefore, we may deny life insurance policy, and in case of claim, we may deny the claim as well. So therefore, disclosure has to be really very important when you apply for a life insurance policy.
Yeah, thank you, Dinesh. So just as any income from real estate, bank, FTs, etc., that an NRI gets in India over and above INR 2.5 lakhs per annum is taxable flat at 30% at highest slab. Will the annuity income from Max Life also suffer flat 30% tax for NRIs? Our GLIP product?
Correct, absolutely. So any taxable income like bank fixed deposit, except NRE, bank fixed deposit, rental income, and annuity income. These are taxable income in India. The person who gives you this money to a non-resident has a liability to deduct tax and then pay you. So if Max Life is giving you annuity, it has to deduct TDS before it pays to you, provided you are a non-resident at that time, at the time of income. But if at that time you are a resident, then you will tell us that I'm a resident. At that time, we will not deduct any TDS. But if you are a non-resident, we have a liability to deduct tax at the rate of 30% under Section 195 of Income Tax Act of India. Um so if your income is already 2.5 lakh rupees, over and above that, if you don't have any other income, and let's say you have 5 lakh rupees as an annuity income, so you are not supposed to pay 30%. We will deduct 30%, but we will give you a certificate that we have deducted 30% tax. You have to file your income tax return and pay. You have to file your income tax return, and let's say the tax rate applicable to you is just 5%. So rest 25% will be refunded to you by the income tax department, and it's very easy. Definitely is very easy. Yes, you may have to take help of a chartered accountant, but in case, let me tell you, I am a chartered accountant, but it's very easy to file an income tax return in India in current situation. Very online. You don't have to go here and there.
Thank you, Dinesh. How is GST treatment when I pay some premium in foreign currency and some in Indian rupees?
If you pay from your foreign currency without converting, no GST. If you pay from NRE account, no GST. If you pay from FCNR account, no GST. But if you pay from NRO account, GST will be applicable. GST Act says that the money should come from abroad. So foreign currency is money from abroad. NRE, you money from abroad and it's converted to Indian rupee. So money came from abroad, therefore no GST. If you pay from NRO, which is Indian earned money, then GST is applicable. You are mute
Exist.
on mute, Archana. Yeah.
This is from an existing client that he had taken a policy. He's an NRI and he has taken a policy under MWPA. So his wife is no more. So if the policy is under MWPA, 100% share is, the children are eligible for the sum assured, or he has to add them as a beneficiary.
I think before answering this question, Archana, we need to mention what is MWPA. India, I don't know how many of you know about this act. This is a special and this very very special provision by Indian laws. This law is, as far as I know, not available in any country. And in my understanding, this law is the most important law for a family. And I mean to say what I mean to say. Um, Married Women Property Act. The full name of the law is Married Women Property Act. This act says that if a husband takes a life insurance policy, and this is only applicable to life insurance, if a husband takes a life insurance policy and he says, I want to take under Married Women Property Act, then the entire money of this life insurance policy is not a property of husband anymore from the day one. It will be property of the wife only, or children, if he has told that this benefit of this should be given to children. If the husband says this money should be given to wife, the money will belong to wife. If the husband says this money should belong to children, it will belong to children. Now you may say, why I should give money to my wife? You have to tell your wife about it. But I think the most important thing about this act is any creditors of the husband, whether bank, tax, or government, or the court of law, none of them can attach any of the property. Only thing which will be left is Married Women Property Act life insurance policy. That cannot be attached at any circumstances. No dispute can be given on this life insurance policy. Every dispute can happen on any property after the God forbidden death of the husband, dispute can happen on the properties, dispute can happen on bank accounts, dispute can happen upon not just outside family, within the family disputes can happen. But to safeguard wife, to safeguard wife, government of India has given one provision, and this provision is only available in India. Government of India has given a provision to a husband. If the husband buys a life insurance policy and tells that this benefit has to be given to my wife only, then the money will belong to wife only. None of them, none of anyone in the world can touch that money. It will be available with the wife till she lives. Therefore, a lot of individuals in India, they buy it. This is also applicable to NRIs. This is also applicable to NRIs, provided the money is lying in India, because this act belongs to India and it is applicable within India. Now, the question which Archana mentioned you is, in case of an unfortunate event of death of wife, then what happens? The money will belong to legal heir of wife, which is children. Children can ask money from, if the wife is no more, or the legal heir of wife can get this money because wife is no more. Over to you.
Yeah, thank you, Dinesh. So this is if by oversight or ignorance an NRI has sourced a life insurance policy recently, say 3 months ago, should he cancel the policy fearing any repercussions since he has not compiled with common reporting standards?
If you have done that, I think it will be better if you disclose now. You don't have to cancel it, because cancellation will not help. You can just have to tell. By ignorance, that's not a problem. It's not a crime which you have done. It's just that you have to tell us, inform, disclose now that I am a NRI when I bought, and therefore please change the status of mine, and there will be a requirement of a foreign address proof which we will require. You have to give that. That's it. Simple, and we will convert it. That's not a problem at all.
Okay, thank you. Do we give term plans?
We do give term plans to NRIs provided they are in India. When they are here for few countries, because of COVID, there are risks applicable, and huge risk. You know it better, you live abroad, and many countries like UK and many other countries of the Europe, US, we have seen what has happened. Therefore, the risk is very high. However, currently we have halted the term insurance. Other insurance policies are very well available, not a problem at all. But term insurance, we are on hold.
Dinesh, there are a lot of other questions also. What I would, because it's already 10:28, so we have to wind up the session also. So what I would request everybody is to have a meeting, to book a meeting with a person who has invited you, and that will be a free consultation, and it will help you to understand that what are the products, what are the available products which could give you according the products and services, it should match your requirements. Once you will have a conversation with the concerned person, they will understand your financial goals and liabilities, and then they will be able to suggest you the right kind of product according what are the tax implications of your country, and what are the currency fluctuation, what are the benefits according to you, so that those will be personalized solutions. So I would suggest all of you to talk to the person who has invited you, book a meeting. We have a team of NRI experts who work 24/7, and everybody is available. I'm available, Dinesh is available. We provide the best of the service, so just take the benefit. So I'm sure it is going to add value to your time. So that's it from our side, and thank you so much for joining in.
Thank you so much. Namaskar. Really appreciate your time. I know we have taken almost 100, almost 90 minutes of your time, but I have hope that we have value added to your time, and really, appreciate the contribution which you have made in uplifting the Indian economy and contributions to India. That's the reason why we celebrate this Pravasi Bharti Divas. Really appreciate you have taken out time from your weekend. Thank you so much. Namaskar.
So we will share the recordings with your office sets. So all the distributors, they can take it from the offices.